Hello, everyone, and welcome back to the world's best investing podcast. I spent the week doing a deep dive on Snap, formerly called Snapchat. And it turns out that actually this company is doing much, much better than most investors believe. This company is trading at 2.7 times sales, which, in my opinion, is actually quite cheap for a company that has made tremendous fundamental progress. There's a lot of narratives about what actually is happening inside Snap. A lot of investors complaining about the CEO, management broadly, claiming there are issues with what seems like an excessively high SBC, stock-based compensation, but the fundamentals speak for themselves. These businesses are about two things, which is one, acquiring more users and retaining them, of course, two, making more money per user. Since 2022, when the market gave up on Snap, Snap has gone from 375 million DAOs, daily active users, in Q4 2022 to 460 million in Q1 2025. This now makes Snapchat one of the biggest social media platforms on earth. You guys know I'm a long-time Spotify bull. Spotify has done very well. They have something like 670 million MAUs, monthly active users. So this number that I just gave you for Snap is actually the DAOs, daily active users. Snap finished Q1 2025 with nearly 900 million MAUs, so actually more than Spotify. However, it's interesting that Spotify today is valued at around 9 times Snap's market cap. And that's because, as many of you know, financially Spotify has done very well. But of course, the question is, why did I go long Spotify back in the day? And that's essentially because I understood this very simple premise that scale precedes profits in the list of strategic priorities by a long shot when your business is essentially a network. You have to get much bigger than your nearest competitor before you think about monetizing. And once you do, if the network in question is well managed, you can actually yield much higher operating leverage out of nowhere, seemingly overnight, by doing something like deploying additional verticals, as Spotify has done with podcasts and audiobooks. In Snap's case, these guys actually make less money per DAO than they did 2 or 3 years ago. In fact, here's the exact number. They were making $12.2 per DAO in Q4 2022. And today, in Q1 2025, they were actually making $12.02 per DAO. And that's obviously less than they were doing 2 years ago. However, this is because a lot of the DAO growth has come from emerging markets. And so what happens is, obviously, in these countries, Snap makes less money. And this is true across the board. Generally, taking a step back, I wouldn't say that most of the growth coming from emerging markets is bad. In fact, I can probably pinpoint a bunch of quote unquote developed economies that I think are going to be poorer than a bunch of these so-called emerging markets in, say, 10 years or so. This is natural. This happens for any other platform that's big enough to have saturated developed markets, such as in Snap's case in the US and Europe, etc. And it's just part of the business. The question is, again, going back to analyzing this business on a first principles basis, these guys can certainly grow their user base. The question is, can they monetize it? And what I found is that Snap is actually pretty good at this, because they have a subscription, premium subscription called Snapchat Plus, which they actually launched in Q2 2022, which is kind of when Snap management decided that they were going to confront the problems brought about by the macro headwinds in 2022, which again weren't exclusive to Snap. And it's kind of where you can trace back the change, or their newly acquired focus on improving the advertising business, developing additional sources of revenue, and operating in a more lean manner. So Snapchat Plus was launched in Q2 2022, and now revenue has since grown to an annual revenue run rate of just over $600 million as of Q1 2025. Of course, the penetration is actually pretty low. We're talking about 3% of Snap's DAOs being subscribed to Snapchat Plus, or just 1.5% of the MAUs, for context. Now, to compare this with other platforms, Spotify has 39% of their MAUs paying for the subscription. So really, almost 40% of all Spotify subscribers pay for the service. Here with Snap, we have 1.5% of MAUs or 3% of DAOs. The question is, as I was saying, because this business is about acquiring more users and making more money, can Snap take this to 30, 40, even 50% of users paying for Snapchat Plus? And the truth is that this subscription has grown tremendously. You guys have the written form of the deep dive available for free, which you can access via the link in my YouTube bio. And it just so happens that these guys have made tremendous progress. Do I have a conviction just yet? No, but I wouldn't exactly rule out this company as an investment. In fact, the thing that has made me most money over the past 5 years has been Palantir and Spotify. And this is essentially the same as the Spotify situation. If you look at the financials, what happens is that over the past 2 to 3 years, Snap management increased capex, and that's because they were investing in these three initiatives that I just explained, which is one, the advertising business, two, growing Snapchat Plus, and other additional revenue sources which they're working on, and then the investments required to obtain higher operating leverage, and thus today that's what's enabled them to operate with lower OPEX as a percentage of revenue. If you look at the graphs, it's very clear that this is a stereotypical kind of situation that we've seen in the network-defined economy. We've seen all these kinds of platforms over, say, the past 3 to 4 years make investments because they just chose to, when confronted with macro headwinds, as was the case for many companies that I've studied with you guys here live. These guys have just increased capex, they've made the investments, and now that those investments are starting to pay returns, with, for example, total advertisers on Snap up 60% year over year, etc. There's lots of data points that suggest that the advertising business is picking up. Now that is coming to fruition, they're scaling back on capex, revenue is continuing to grow in line for now with the DAO growth. And so what you see is an inflection point in free cash flow per share. If you look at the graph on the written form of the deep dive, it's quite spectacular, and it's sort of reminiscent of Spotify. If you look at Spotify's free cash flow per share, it's kind of flat. And then, going into 2023 or so, what you see is a kind of hockey stick inflection point. And it's exactly the same thesis. You just have this tremendous user base. Then you focus on monetizing, being lean, etc. And just because of the nature of a network, it goes from not producing profits to producing a lot of it, quote unquote, overnight. And look, qualitatively, yesterday I was at a party and it was a bit of a younger crowd. I'm 32 years old now, so I'd say the average age of the crowd was, say, from 23 to 27 years old, etc. And, I had just finished my Snapchat deep dive and I was looking at people's phones. I'll confess. I was observing what people were doing with their phones. And a bunch of times I saw a few people unlocking their phones and the first thing that popped up on the screen was Snapchat. And then I went on the location on Instagram and I started looking at people's content, and many of the people that were posting content with the tag of the location actually had their Snapchat handle in their Instagram bio. And then when I posted my Snap thesis yesterday on X, many of you guys were saying, well, I have, a 15-year-old daughter and her and all her friends use Snapchat to communicate. They don't use anything else. A bunch of you guys were telling me about children of friends of yours, etc. So it does seem to be qualitatively that this social media network is actually quite prevalent in a younger crowd. And it just so happens that you have investors on the other side of the table talking about narratives which really don't match the reality. And as I was saying, complaints about the CEO, which, to be fair, the guy doesn't really show up on the earnings calls, only started doing so recently, it seems. But if you judge the management team per the evolution of the fundamentals, it's just doing very well. These businesses are simple in the abstract, just more users, more money per user. And I think Snap is doing very well. I'm wanting to say Spotify all the time because the thesis is just the same, but it's obviously Snap. Now, the question is, these guys have like around 1 billion MAUs. The financials are looking good apart from the debt. So total debt actually just outpaced total cash and short-term investments over the past 2 or 3 years as they increased their cash burn in tandem with capex. But now that cash production is inflecting back upwards, you could say that the financial risk brought about by this inflection point in the balance sheet is likely to be mitigated going forward, etc. But there is a bit of financial risk. But anyway, the question is, where does this go from here? And again, qualitatively, what I found in my research and what the party yesterday confirmed, in my opinion, is that Snap is actually highly differentiated in the social media world. You have you have a lot of social media platforms that basically suck you in into an alternate virtual reality. The company that I think most does that while wasting your time is Meta. Meta is just a huge waste of time. And then another platform that does that, and I think is quite productive, at least for many of us, is X. Now, where Snap is different is it doesn't actually suck you into a virtual vortex of sorts. It connects you with your friends in the world. So it has this very visual focus on enhancing the world via AR technologies, augmented reality, and connecting you with your friends. And again, as I was saying, per the evolution of DAO's daily active users, it seems people like this. Now, where does this go from here? In a world in which you have a population of approximately 8 billion people, as in, Snap is highly penetrated, has nearly 1 billion MAUs, definitely in developed economies, it's highly penetrated, especially in the US with this demographic that I was talking about. Where does this go from here? So they actually, I believe, and management actually talked about this in 2022 when they laid out the strategy for the coming years, which they've executed well. We'll talk about this now. They said they have a tremendous opportunity in driving commerce via augmented reality. And I agree. It's, as I was saying, the reason Spotify has done so well and the investment is up already something like 8x or something, 7x actually, it's been correcting over the past month a little bit. The reason they've done so well is they were able to radically increase the money they make per user at a marginal cost. And although I don't think we will see these guys deploying podcasts and audiobooks, etc., as Spotify has done, what I think they can do is increase how much money they make per DAO exponentially by driving commerce. So at the moment, the $12.02 per DAO that I was talking about in Q1 2025 is mostly the result of advertising, which, by the way, if you read through the quarterly conference calls, the transcript, these guys are obsessed with advertising. It's painstaking to read through. All the details they work on a quarterly basis is just so incredibly boring. But the qualitative perception that I take away from those very boring details is that these guys are highly, highly focused on driving advertising. They're doing that well. They're doing very well. But they can go, in my opinion, from $12.02 per DAO, obviously higher just by continuing to work on the advertising business, driving Snapchat Plus penetration, but then just, and I assume this would be embedded in Snapchat Plus, just by driving features that literally drive commerce and have people spend more money on the platform, and ultimately Snapchat taking a fee from whatever money they drive to merchants. Huge opportunity just by the nature of the platform, because they have nearly 1 billion MAUs, nearly 500 million DAOs, and these are young people that love the app and use it a lot, and they're basically connected with the physical world. And so I think there's a huge opportunity there. I'm not necessarily sold, as I was saying, I don't have a conviction, but this is the kind of situation that I'm definitely not going to sleep on, just because it's right up my alley. This is a network, the fundamentals are there, people complaining about things that really don't make sense, a price to sales ratio of 2.7. And increasingly, this is looking like a little bit of an asymmetric scenario to me. As I was saying today on X, I'd much rather go long something like Hims and Duolingo because I do have convictions there. But again, I've studied these companies for many years, Hims and Duolingo, and I've only really started getting to know Snap right now. So I'm actually quite impressed. And I think people are sleeping on this opportunity. Now, the thing with management, and I said I was going to go back to this. If you read their shareholder letter in Q2 2022, they've done by now, exactly what they said they were going to do. So they said, look, we have this problem. We have macro headwinds for the advertising business, and we're going to fix it by pursuing these three strategies. They said they were going to invest in their direct response advertising business. They were going to seek to increase Snap's earning power by developing alternate sources of revenue, such as Snapchat Plus. And then they said they were going to operate in a leaner manner. And if you look at a bunch of metrics placed on a graph, as you have them in the written form of my deep dive, they've executed very, very well. Now, I haven't actually dived deep yet into the SBC matter, but I will do over time. But what I'm not going to do is not continue looking at this company because of the narratives or because of concerns about SBC. The thing with SBC is it's hard to actually develop an opinion by looking at the numbers at face value. You have to get to know the management team. And if you have a management team that's highly capable, ethical, and shareholder friendly, just the odds of getting burnt by high SBC is low. Now, what happens in tech, and it's happening in Palantir in real time, is when you have something that truly grows exponentially in absolute terms, and then in terms of its relative earning power in the market, SBC, although it may seem excessive at the beginning, ends up working out. Conversely, in tech, and this was the case with Fairchild Semiconductors, which at one time employed the employees that then went on to found Intel. If you don't give people enough SBC in tech, then they run away elsewhere. So it's a highly competitive market, broadly and specifically for talent. So I wouldn't jump to conclusions just here, but these guys essentially have done what they said they were going to do. So very impressive, actually. This is a top 10 social media network globally. It continues to grow. If you look at the graph of number of daily active users in Snapchat from 2014 to date, it's basically up 10x. And I believe these guys have demonstrated the ability to improve monetization over time. Again, what is the common denominator of DAO growth and improved monetization? As is the case with all businesses of this sort, it's just about being very good at iterating a user interface in order to maximize lifetime value. This is the same for Spotify, it's the same for Duolingo, it's the same for Netflix, it's the same for Uber, it's the same for Snap. So if I had to bet on whether these guys can drive Snapchat DAO penetration from 3% to 30%, I would say the odds are kind of favorable. If I had to say whether these guys can capture the opportunity for commerce via augmented reality technologies, I would say the odds are favorable. So very interesting. I quite like the company. I think that people are sleeping on this, as I was saying. And if you want to go and read the full thing, it's available for free in the bio, my YouTube profile. And I'll be doing a new deep dive next. I won't say which one I'm going to do, but I'm going to do it. Here in the summer by the beach, you'd actually think I wouldn't be working, which other years I haven't. But I'm so relaxed that I think that the mental performance is up. It actually takes less effort in aggregate. When I write, I think it's much harder to write and be focused, but then the rest, the thinking, the reading just flows very naturally. So guys, thank you very much for joining me. As always, if you enjoyed this deep dive, could you please share this with one friend whom you think will enjoy it? These deep dives and updates are for free. And so the only way this grows is with your help. So thank you very much in advance for joining me. Take care and until next time.